From looms to legacy, the early days of Berkshire. Berkshire Hathaway's story did not begin with stocks and insurance. Its roots trace back to the 19th century. It started in the New England textile industry. The Hathaway Manufacturing Company was founded in 1888. It produced cotton goods in New Bedford, Massachusetts. This was a time of industrial growth. But the textile business was notoriously difficult. It faced constant pressures from competition. Labor issues and economic downturns were common. Another key company was Berkshire Fine Spinning Associates. This company itself was a result of mergers. It combined several older textile mills in Massachusetts. One of these mills dated back to 1806. Berkshire was a significant player in its field. It specialized in fine cotton textiles. The industry, however, was in a long decline. Many mills struggled to remain profitable. They faced competition from the South and overseas. The eventual merger formed Berkshire Hathaway in 1955. Despite their combined strength, the industry's problems persisted. The American textile sector was shrinking. Berkshire Hathaway was fighting an uphill battle. The future looked quite uncertain for the textile giant. A new weaver, Warren Buffett, takes the helm. Warren Buffett's involvement with Berkshire Hathaway began in the early 1960s. He was a young, astute investor from Omaha, Nebraska. Buffett ran an investment partnership. He was always searching for undervalued companies. Berkshire Hathaway appeared on his radar. He noticed its stock was trading below its working capital. This was a classic cigar butt investment. It seemed to offer one last puff of profit. He started acquiring shares in 1962. Buffett initially invested because the stock seemed cheap. He saw the underlying value of its assets. However, his relationship with the company's management soured. He felt misled by then CEO Seabury Stanton. This dispute led Buffett to buy more stock. He bought enough to gain control of the company. In 1965, he effectively took over Berkshire Hathaway. At the time Buffett took control, Berkshire's textile operations were bleak. The industry was in terminal decline. Buffett knew this well. He understood that the textile business was a poor one, yet it offered very little return on investment. His vision for Berkshire Hathaway was entirely different. His journey was just starting. The Oracle's touch, early transformations and value investing. Warren Buffett reshaped Berkshire Hathaway. He shifted focus from textiles to investments. Seeking new opportunities, he diversified. In 1967, he acquired National Indemnity. Insurance float was invested for growth. Buffett applied value investing principles. He favored wonderful companies at fair prices. This was the foundation of Berkshire's success. Building an empire, diversification, and key acquisitions. The 1970s and 1980s marked significant expansion. Berkshire Hathaway diversified rapidly. Buffett used insurance cash to buy stakes in public companies. He also acquired whole businesses. See's Candies was a major acquisition in 1972. It had strong brand loyalty and pricing power. This taught Buffett about brand value. Berkshire continued its acquisition spree. A landmark acquisition was Geico in 1996. Geico became a cornerstone of Berkshire's insurance empire. Berkshire Hathaway transformed into a true conglomerate. The Woodstock of capitalism, shareholder culture, and Buffett's wisdom. Berkshire Hathaway is famous for its unique shareholder culture. At its heart is the annual shareholders meeting. Held in Omaha, Nebraska, it attracts tens of thousands of attendees. People come from all over the world. It has been nicknamed the Woodstock of capitalism. The meeting is more than a business event. It is a celebration of the company and its values. Shareholders gather to listen to Warren Buffett and Charlie Munger. They answer questions for hours. Warren Buffett's communication style is a key part of this culture. His annual letters to shareholders are legendary. They are written in clear, plain English. They explain complex business concepts simply. Buffett is candid about both successes and failures. This transparency builds trust and loyalty. His folksy wisdom and humor are widely admired. He has cultivated an image of an accessible, trustworthy leader. He is seen as a steward of shareholder capital. Buffett's public persona plays a significant role. He is known as the Oracle of Omaha. He is respected for his investment acumen. He is also admired for his ethical approach to business. He lives modestly despite his immense wealth. These qualities resonate with many investors. Navigating the new millennium. Berkshire's modern investments from 2000 to 2015. The new millennium brought fresh challenges and opportunities for Berkshire Hathaway. Warren Buffett continued to seek out large strategic investments. The company's size meant it needed bigger deals. These deals had to significantly impact its earnings. In 2000, Berkshire acquired Mid-American Energy, now Berkshire Hathaway Energy. This marked a major move into the regulated utility sector. These businesses provided stable, predictable earnings. They fit Buffett's criteria perfectly. A landmark acquisition during this period was Burlington Northern Santa Fe, or BNSF Railway. Berkshire completed the purchase in 2010. It was one of the largest acquisitions in its history. Buffett called it an all-in wager on the economic future of the United States. Railroads are capital-intensive businesses, but they are essential to the economy. BNSF provided another stream of steady earnings. It further diversified Berkshire's operations. During the financial crisis of 2008 to 2009, Berkshire played a crucial role. It acted as a lender of last resort for some companies. Buffett invested billions in Goldman Sachs and General Electric. These investments were profitable for Berkshire. They also enhanced its reputation as a stabilizing force in the market. The Berkshire brand marketing through trust and transparency. Berkshire Hathaway's approach to marketing is quite unconventional. The company does very little traditional advertising for itself at the parent level. Its subsidiaries like Geico or Dairy Queen do advertise. But Berkshire itself relies on a different strategy. Its brand is built on reputation, trust, and transparency. Warren Buffett's personal integrity is central to this brand identity. His actions and words have cultivated an image of reliability. This is a powerful marketing tool. The primary marketing vehicle for Berkshire is Buffett himself. His annual shareholder letters are eagerly read worldwide. His public appearances and interviews generate immense media coverage. He communicates directly and honestly with shareholders. He explains his investment decisions and business philosophy clearly. This transparency fosters a deep sense of trust. Shareholders feel like partners in the enterprise. This is more effective than any glossy ad campaign could ever be for the parent company. Berkshire's brand is also reinforced by its decentralized structure. Subsidiary companies operate with considerable autonomy. They maintain their own distinct brand identities. The association with Berkshire signals financial strength and stability. Beyond Buffett's succession, sustainability, and the future of a titan. As Warren Buffett and Charlie Munger aged, succession planning became critical. Investors wondered who would lead Berkshire Hathaway next. Buffett gradually revealed parts of the plan. He assured shareholders that Berkshire's culture would endure. Greg Abel was named vice chairman of non-insurance operations. Ajit Jain was named vice chairman of insurance operations. In 2021, Abel was designated as Buffett's successor as CEO. The future of Berkshire Hathaway rests on sustainable growth. The company's size presents challenges. Finding large acquisitions is difficult. Berkshire's diverse portfolio provides resilience. Its strong financial position allows it to weather economic storms. The focus remains on long-term value creation. The company aims to compound capital at attractive rates. This core principle will guide its future strategy. Berkshire's enduring principles are deeply embedded in its culture. These include a commitment to ethical conduct. They involve rational capital allocation. A decentralized management philosophy is also key. These principles are expected to continue under new leadership. The company's strong balance sheet and cash-generating businesses provide a solid foundation. The legacy built by Warren Buffett is designed to last.